CC, welcome to the Orbit. It is Wednesday, May 29th. We've got stocks lower today. We're down about 0.5% as we record here, but we were down lower. You can see on the chart we were down even lower, down about 0.8% to start the day, which was obviously beyond what options were pricing. But as we've been noting relentlessly over the last couple of weeks, we've got this 5,300 gamma level. The market is very loaded with gamma. Sell-offs are being bought and rallies are being sold, and we keep finding ourselves at that 5,300 level. We closed again yesterday within about 6 or 7 points of that 5,300 level. Does that continue, or are we about to see the market making its intentions known, which way it wants to go from this 5,300 level? Is it going to break out, or is it going to pull back a little bit and retrace some of that rally we've seen over the last month? We will find out, and maybe we'll find out a little bit more today. We have an interesting situation where TLT has actually been retreating pretty hard over the last week and a half, let's say. We are now down below that 90 level. We're at 89, and this has been a pretty ugly couple of days as yields begin to rise again and kind of changing the story and the backdrop of the market. So we are now down at 89, and the SPX and the SPY have been going sideways, and part of that is from stocks like NVIDIA are sort of keeping the market higher. And there might be some underlying weakness here that is worthy of being aware of, at least as a trader. So you can see the sideways action we've been going. This is the same exact time period that TLT has been going down. So the bond story is very different than what the stock market story is. And there's a couple of factors, obviously that gamma that we've been talking about relentlessly over the last couple of weeks, but also things like NVIDIA and the semiconductor stocks maybe holding the market up. Now, that could resolve itself and TLT could bounce and the bond yields could change direction, which would then put wind in the sails of the market for another leg higher. Or if TLT stays weak and keeps going lower, at some point that might be too much pressure on the stock market and it can't resist, and NVIDIA can't hold it up forever. Now, speaking of that, and I mentioned this on Twitter yesterday, with volatility so low, and it really goes out pretty much up until the election in the fall, you have very low implied volatility across the market. And if we go out here, you can sort of see out into July, for instance, we're at IV at under 12 IV. What that means is if you are a little bit worried here, even for a little bit of a retracement on this recent move higher, the options market with such low volatility is allowing you to put on things like debit put spreads. Let's go out into July here and let's look at a put spread. And I just want to show how close these break evens are. 527, 510 put. Let's make this 15 wide to make the math a little bit easier. So as you can see here, you're risking about 400 to make or protect, in the case of a hedge, up to 1,100. The break even is 523. So that is just about $3.80 lower than here. And this is all the way out until July 19th expiry. SPY is down $3 today, to put that in perspective. And this is one of the advantages of low vol. We talk a lot about selling low vol and how you have to be careful. But at the same time, when you have low vol all the way out a couple of months, it really sets up some opportunities to take advantage. Now, of course, the flip side of that is still bullish out the next couple of months, and we're going to get this slow creep higher even in the market. Call spreads and things like that are the same exact way in the major indices. Qs, same story. Look at this bounce today. We're only down about 0.4%, but when you go out on the 3-month chart, it wouldn't, to hedge even half of this move higher wouldn't take much as far as a put spread. And then obviously looking for breakouts would be the same thing. Very low volatility, very close break evens on debit spreads.